The committee will come to order for a hearing on how the tax code's burdens on individuals demonstrate the need for comprehensive tax reform. We meet today to continue our dialogue about what I hope will result in a bipartisan path forward to reform our federal income tax system. While there has been a lot of valuable discussion about the impediments the tax code creates for America's job creators, and we will certainly continue that discussion over the time ahead, today's hearing will focus on the burdens imposed by the current federal income tax system on individual taxpayers and families. Today's hearing is especially timely since each one of us likely knows a family that is racing to file their taxes before this year's April 18th deadline. And because of the thousands of amendments to the tax code enacted over the past quarter century, this race to the finish has become increasingly challenging over the years. And since the Tax Reform Act of 1986, the last comprehensive tax reform enacted by the Congress, the code has become a maze of increasingly complex credits, deductions, exclusions, and exemptions. The challenges created by the tax code for job creators and families are rooted in a similar place. The tax code is too complex, too costly, and takes too much time to comply with. Whether it's the compliance and administrative burdens or the impact of temporary and expiring tax provisions, today's tax code is hampering the ability of individuals and families to plan their finances with reasonable certainty. With nearly 4,500 changes in the last decade, 579 of them in 2010 alone, the code is too complex. Adding to that complexity is the fact that each tax code provision is a little bit like a cell. Each one has its own distinct features, characteristics, and lifespan. For example, over 200 federal tax provisions are scheduled to expire between 2010 and 2020, whereas in 1998, there were only 50 expiring provisions. And while 20 years ago, it was mostly businesses affected by the temporary nature of tax provisions, now families and individual taxpayers are held captive to the calendar. For example, tax rates on ordinary income and on investments, the amount of the child tax credit, the deductions for state sales taxes, and college tuition, just to name a few, are all temporary in nature. Given the complexity created by the ever-changing tax code, it's easy to understand why compliance with it has become too costly for American families. According to the National Taxpayer Advocate, in 2008 alone, taxpayers spent $163 billion complying with the individual and corporate income tax rules. That's billion with a B. These costs impede the ability of individuals and families to put together their household budgets. And since provisions may change from one tax filing season to the next, it's no wonder that almost 9 out of 10 families either hire tax preparers or purchase software in order to calculate their taxes. This is a sad reminder that we now have a code that can only be managed if you happen to be someone who can hire an expert or deal with its challenges. And not only is the tax code too complex and too costly, it takes too much time to comply with. Navigating through the tangled web of the tax code has resulted in taxpayers spending over 6 billion hours annually to comply with the code. Ask any family, and I'm sure they'll have a long list of better ways they could be spending their time. Although it will require a lot of hard work on our part to achieve consensus on a solution, I think it's safe to say that we all agree that the current tax code is broken. We can do better. The members of the Joint Committee on Taxation had a very positive conversation with two key architects of the Tax Reform Act of 1986 during last week's JCT roundtable discussion, Secretary James Baker and Congressman Dick Gephardt. Their message was clear. It will take the leadership of this Congress and the White House to get this done. The American people deserve a tax code that is responsible and responsive to their needs. We can do our part by working together to make sure that this one is fairer and simpler for all families. And I look forward to hearing from our witnesses today. And with that, I yield to Mr. Levin for his opening statement.
Thank you very much, Mr. Chairman. The announcement for this hearing stated that, and I quote, Congress and the President need to work together to achieve a tax system that is fair, simple, and efficient. While some seem to prefer a business-only approach to tax reform, we owe it to the hardworking taxpayers we represent to ensure that they are not left out of this discussion, end of quotes. I very much agree with that. The kind of tax reform proposed in the Republican budget would reduce taxes for the very highest earners and increase the burden on working families. These reductions for the highest earners come on top of the nearly $700 billion in additional tax cuts the Republican budget assumes for taxpayers with income above $250,000, almost 80% of which go to people making more than $1 million. As we consider complexity in the individual tax system, as we must, we need to be sensitive to the reasons provisions were enacted in the first place. Our goal should be to strengthen provisions that help working families send their kids to college, save for retirement, or make ends meet. The Republican budget indicates that the individual and corporate rates will be reduced from 35 to 25%, but leaves it up to this committee, the Ways and Means Committee, to fill in the details. To do so in a deficit-neutral manner, some estimates are that we would have to eliminate more than $2.9 trillion worth of tax expenditures over the next decade. The child credit, earned income tax credit, American Opportunity Tax Credit, and retirement savings accounts are primarily middle and lower income provisions. The need for simplification cannot be used as a rationale for irrational inequity or for undoing progress that helped foster the growth of the middle class in this country. So I look forward, Mr. Chairman and colleagues, to continuing this conversation and hearing today's testimony, and I join in thanking all the witnesses for participating. I yield back.
All right, thank you very much. We have 4 witnesses today. Alan Viard, resident scholar of the American Enterprise Institute in Washington, D.C. Annette Nellen, CPA, Director, Masters of Science in Taxation Program at San Jose State University in California. Mark Johannesson, a CFP Managing Director, Harris SBSB, McLean, Virginia. And Neil Buchanan, Associate Professor of Law, the George Washington University, Washington, D.C. Thank you all for being here. Under our rules, you each have 5 minutes. We have your written testimony. You each have 5 minutes to summarize your statement, whereupon, after the panel completes all of their testimony, we'll go to member questions. So, Mr. Viard, you may begin. You have 5 minutes.
Chairman Kemp, Ranking Member Levin, members of the committee, it's an honor to be here today to testify about the tax code's burdens on families and individuals. Let me note that the views I express today are my own and do not represent the views of the American Enterprise Institute or any other person or organization. In keeping with the theme of this hearing, I will focus on the complexity affecting individual taxpayers with non-business income. Of course, as the members of this committee are aware, there's also a significant degree of complexity affecting tax returns that contain business income, and that includes not only the corporate income tax returns that C corporations file, but also the individual income tax returns filed by owners of pass-through firms. But I will not discuss those today, nor is there time to discuss all of the provisions that add to the complexity of the code. Mr. Chairman, you mentioned the billions of hours that taxpayers spend on their returns. I will have to focus today on 3 specific areas: the needless complexity of the incentives for saving, education, and families in their current design, the proliferation of income-based phase-outs in the code, and the alternative minimum tax. Now, as I will emphasize throughout my testimony, these problems can be addressed separately from such contentious issues as the appropriate level of revenue, the appropriate degree of progressivity in the tax code, or even the appropriate breadth or narrowness of the tax code. I believe that these issues should be addressed as part of comprehensive tax reform if such reform is adopted, but should also be addressed separately if comprehensive reform does not occur. And I think it's an opportunity for members of both parties to work together to eliminate this needless complexity. The first area that I want to examine is the complexity of the current tax incentives for saving, education, and children. As Ranking Member Levin mentioned, these provisions play important purposes in the Internal Revenue Code, but their current design today suffers from needless complexity that actually undermines their efficacy. These problems have been documented by such sources as the Joint Tax Committee, the National Taxpayer Advocate, and the 2005 President's Advisory Panel on Federal Tax Reform. So I do not detail them here in my oral remarks, and even in my written testimony, I rely primarily upon the findings of those previous studies. Just to state the matter briefly, the current tax system provides more than 20 tax-preferred savings accounts and plans, multiple tax preferences designed to encourage education, and a wide array of incentives for families and children, including both a credit and a deduction for the children in typical households. The National Taxpayer Advocate, the President's Advisory Panel, and the Joint Tax Committee have all proposed ways to consolidate these incentives while still allowing them to fulfill their essential purpose, and to also promote greater uniformity of rules across the handful of incentives that might remain. Let me next turn briefly to income-based phase-outs. There are more than a dozen provisions in the tax code phase out or phase down tax credits or exclusions or deductions as income rises. These are measures that promote progressivity in the code, and like other measures that promote progressivity, they increase the effective marginal tax rate that taxpayers face. But compared to changes to the explicit rate schedule, income-based phase-outs are generally an inferior way to promote progressivity. They do make it more difficult for taxpayers to know the true marginal rate that they face, and they require taxpayers to complete an array of worksheets to apply the income-based phase-out that applies to each provision. Moreover, there's no rhyme or reason as to how the income-based phase-outs work across different provisions. Some of them are indexed to inflation, some are not, and they treat family status in different ways, and so on. So in general, transparency and simplicity can be advanced by eliminating most of the income-based phase-outs while making appropriate adjustments to the rate schedule to achieve any desired degree of progressivity. The final problem I want to address is the alternative minimum tax, a parallel tax system that disallows some, but not all, of the tax preferences that can be claimed under the regular income tax. More than 4 million taxpayers are currently subject to the AMT. If the annual patch that Congress passes to address the AMT were to expire, more than 30 million taxpayers would become subject to this parallel tax system. The AMT represents an attempt to curtail the use of certain tax preferences, but it does so in a capricious and needlessly complex manner. Whatever preferences are desired in the tax system can be provided in the regular tax system. Whichever ones need to be curtailed can be curtailed within the regular tax system without having to put taxpayers through a second tax system with a completely separate set of rules. In summary, Mr. Chairman, I believe that these are areas that can be addressed on a bipartisan basis because they do not raise some of the contentious ideological and philosophical issues raised by such things as the level of revenue or the level of progressivity that the tax system has. Certainly this complexity is a problem that the American people face, but it's also an opportunity for members of both parties to work together to give the American people a better tax system. Thank you, Mr. Chairman.
Thank you. Thank you very much. Ms. Nellen, you have 5 minutes.
Good morning, Chairman Camp, Ranking Member Levin, and members of the committee. My name is Annette Nellen. I'm a tax professor at San Jose State University. I'm a member of the American Institute of Certified Public Accountants and the chair of its Individual Income Taxation Technical Resource Panel. Prior to joining San Jose State, I worked at Ernst & Young and the IRS. My testimony today is based on my 20 years of experience working on tax reform and simplification. Thank you for the opportunity to appear today and provide testimony on the serious complexity problems that burden individuals and families and weaken our tax system. Our current tax law is often incomprehensible. Its complexity imposes burdens on individuals in terms of time and out-of-pocket costs and increases the tax gap. A tax system should follow the principle of simplicity. That is, the tax law should be simple so that taxpayers can understand the rules and comply with them correctly and in a cost-efficient manner. As noted in our written testimony, there are several commonly encountered areas of tax law that frustrate individuals, generate filing mistakes, and lead to missed opportunities to take full advantage of incentives. I'll briefly address a few of these complexities as well as some possible solutions to illustrate that much complexity can be avoided. First, there are 14 tax rules that offer some incentive for higher education. While all the rules have a common purpose, the definitions, eligibility, and income phase-outs vary. Further, use of one benefit likely precludes use of another, making it difficult to know which is the best incentive to use. This confusion leads some individuals to forgo the tax benefit altogether and some to claim credits beyond what they're entitled to. The ICPA recommends, at a minimum, consolidating the education provisions and providing uniform definitions. Another area in need of simplification is the kiddie tax, which was enacted in 1986 to prevent parents from shifting tax liabilities on investment assets to their children in order to lower their rates. These rules can apply to children under the age of 18 or full-time students up to age 23. Challenges with the kiddie tax include obtaining the required information and the interaction with AMT and capital gains. The AICPA recommends using a separate rate structure for children subject to the kiddie tax. Another point of confusion stems from use of due dates that are not what an individual would expect. For example, an individual with a foreign financial account who needs to file a special form known as FBAR must file it by June 30th, an odd due date in the tax system. We recommend October 15th, the extended due date for Form 1040. Another significant area of complexity affecting a growing number of individuals each year is the AMT. The AICPA recommends that the AMT be repealed. A second tax system is unnecessary. It is burdensome in terms of record keeping, calculations, and the confusion it causes individuals when, for example, they think their state taxes are deductible, only to find that they are not because they are an AMT. In addition, phase-outs complicate tax calculations and planning. For example, the $1,000 child credit starts to phase out or reduce once a married couple's income reaches $110,000. However, income levels and measures of income for the phase-outs vary among incentives, leading to confusion. We understand phase-outs exist to prevent higher-income individuals from reaping full benefit of many favorable tax rules. In effect, though, phase-outs disguise an individual's true marginal tax rate and make it difficult to know if a tax incentive is truly available to you. The Earned Income Tax Credit is another area of complexity. Any reform effort should take into account the difficulties of administering this significant program and reduce its complexity. Lastly, much frustration is due to the numerous temporary provisions in our tax law. Many temporary provisions are routinely allowed to expire for a period of time, then are temporarily reinstated. This leads to confusion, frustration, and often less than ideal use of an individual's financial resources. For example, when the AMT patch is not in place at the start of a year, many individuals must include AMT in their quarterly estimated tax payments. Or when the exclusion for employer-provided education expires, employers might stop offering the benefit, or employees may opt out due to the tax consequences as they cannot rely on the provisions being retroactively reinstated. The AICPA looks forward to assisting you in reducing the many compliance and planning burdens that the tax system imposes on individuals and families. Thank you for this opportunity to testify. I look forward to your questions.
Thank you very much. Mr. Johannesson, you have 5 minutes.
Chairman Camp, Ranking Member Levin, and esteemed members of the House Ways and Means Committee, thank you for inviting me here today to speak to you on behalf of the Financial Planning Association. My name is Mark Johannesson. I'm a certified financial planner at Harris SBSB, a firm in McLean, Virginia. In addition to being a planner myself, I served on the Financial Planning Association's Board of Directors for 6 years and served as elected president in 2008. Much of the difficulty in understanding our tax system arises from the ever-changing provisions of the code. In 1986, the goal of tax reform was to make the code more fair and simple. Since that time, there have been tens of thousands of changes and additions, each with its own set of rules, requirements, and phase-outs. Congress has also added provisions that are designed to encourage certain behaviors. Many of these changes have the support of financial planners, such as tax-preferred savings vehicles for medical, education, and retirement needs. Nonetheless, all tax incentives should be regularly reviewed by this committee to ensure they effectively meet Congress's policy goals. Even with my additional education, training, and experience, I know that only professionals completely dedicated to understanding the principles of the tax code are able to complete a tax return for all but the most simple of filings. If the interplay of various provisions confuses trained financial professionals, imagine the plight on the average citizen. Today, the most basic tax provisions are in a constant state of flux. The inability to predict, even in the medium term, the future rates in income, capital gains, and dividends makes financial planning more challenging and expensive for consumers. All too often, I've observed consumers holding off on making important plans while they wait for Congress to act. So I have some specific examples in the remaining time that I have. It's well referenced so far, the complexity that AMT, the alternative minimum tax, brings to the average taxpayer, with 30 million folks ultimately possibly being affected if no patch is enacted. So I'll limit my time to discussing the investment issues related to this. Under current law, the top rates on dividends will nearly triple from 15 to 43.4% in January 2013. The long-term capital gains rate will also increase from 15 to 20%. This is already affecting investment decisions as individuals shift their choices to maximize their after-tax profits. In some cases, we're seeing investors choosing stocks that will produce more capital gain or perhaps tax-free investments like municipal bonds. And the impact on the capital markets of a permanent tax code should not be overlooked. Starting in 2010, a greater number of taxpayers were allowed to convert their traditional individual retirement accounts, their 401ks and 403bs, to an after-tax Roth account. For most investors, the question that determines whether to undertake this conversion is whether one will pay higher or lower income taxes in their retirement. Many people can estimate their likely income bracket, but they must also make a best guess about what the tax rate will be, for that bracket will be in their retirement. And then finally, in 2010, individuals faced another decision of whether to elect to pay the entire tax on their conversion in 2010 or split it over through 2011 and 2012 returns. Because rates were scheduled to increase, many decided to take the tax hit in 2010. And this caused general confusion as we approach the end of the year. Charitable contributions have become one of the provisions of the tax extenders exclusions, where exclusions from income up to $100,000 can be distributed or transferred directly to a charity. And if we can look at 2010 alone, when the extension didn't occur until December 17th, I believe, already folks had made their minimum required distributions by that time, and so it kind of muted the actual impact for charities and for our clients to take advantage of tax advantage. Estate planning is another area well addressed, I'm sure, by this committee. So in closing, in its effort to appeal to constituent concerns, Congress has killed the code with its kindness, loading it up with thousands of special breaks and exemptions. While the goal is to encourage certain behaviors is laudable, the sheer magnitude of these special breaks and exemptions has made the income tax system unmanageably complex. I would urge this committee to work together to pass tax reform. Thank you.
Thank you. Mr. Buchanan, you have 5 minutes.
Chairman Camp and Ranking Member Levin and members of the committee, I am an economist and a professor of tax law at the George Washington University. Thank you for giving me the opportunity to address the committee today. At the risk of stating the obvious, there are many areas of the Internal Revenue Code that could benefit from rationalization and simplification. In areas in which multiple provisions have accumulated over time, such as retirement savings and education incentives, the same incentives and benefits surely could be provided in a simpler fashion. That being said, I hope through my testimony to warn the committee of some red herrings, issues that need not be addressed as you work to simplify the lives of Americans who honestly try to comply with the tax laws. Clearing away some tempting distractions will, I hope, provide more clarity and time for the committee to focus on genuine tax simplification. First, the committee should be wary of reducing tax complexity without reducing what we might call overall complexity. A simple way to reduce the complexity of the tax code, after all, would simply be to stop running certain benefits through the tax code and instead run them through some other agency of the government. The mortgage interest deduction, which is about housing, could be turned into a benefit run by Housing and Urban Development. The Earned Income Tax Credit, which is a benefit to workers, could be run by the Department of Labor. Doing any of those things, however, would do nothing to make the lives of American taxpayers less complicated. If anything, compliance burdens would become even more onerous, as our citizens would now have to deal not just with the IRS, but with newly created administrative arms of other cabinet departments, or mini IRSs, which would also add to federal spending, by the way. The IRS has the advantage of being a single agency with which citizens interact, and it is the logical agency to provide incentives and benefits, the eligibility for which are conditioned on income levels. In addition, decades of experience have shown that the IRS and its employees possess the expertise, dedication, and experience, notwithstanding years and years of chronic underfunding, to handle the administration of important benefits that we administer currently through the tax code. Second, reducing the number of tax brackets is not an important aspect of simplifying taxes, and it has the undesirable effect of making the tax code less progressive. Some analysts have asserted that the existence of multiple brackets is confusing, making it more difficult for taxpayers to figure out how much taxes they owe each year. In fact, all of the work and uncertainty involved in tax compliance is related to what happens before tax rates even become relevant. That is, once a taxpayer has determined his or her taxable income, it takes merely a few seconds, and I repeat, seconds, to look at the relevant table to determine the tax owed. We could have 10 or 20 tax rates without increasing the compliance burden. The taxpayer's uncertainty is in figuring out what to include, exclude, deduct, credit, and so on, not in dealing with different tax rates. Third, as a related matter, the existence of so-called phase-outs is not inherently complicated either. Again, the difficult part of the process is in figuring out whether a person is eligible for a particular provision. The arithmetic involved in the phase-outs is a relatively simple afterthought, and the IRS is perfectly capable of providing simple tables to assist the taxpayer in determining how a phase-out alters the final tax computation. I should add the qualification that phase-outs can pile up, with a different phase-out for each of several different tax provisions, which does complicate compliance somewhat. I offer an example of how to deal with this problem in my prepared testimony. In addition, it is important to remember that phase-outs serve two important purposes. First, they are a way to means test benefits that, after all, cost the federal government money. Second, phase-outs avoid abrupt all-or-nothing changes to tax benefits, with a taxpayer suddenly losing all of a benefit after hitting an income limit or some other arbitrary threshold. My message today, Mr. Chairman, therefore amounts to taking 3 items off the list of possible approaches to tax simplification. First, taking policies out of the tax code and out of the IRS's jurisdiction can make citizens' lives more complicated rather than less so, as it would simply relocate the complexity that our citizens face rather than actually reducing complexity. Second, the number of tax rates is a non-issue as far as complexity and compliance burdens are concerned. And third, the existence of phase-outs is nearly a non-issue, and the complexity of phase-outs can be all but eliminated by harmonizing phase-outs across all provisions that Congress chooses to means test. The committee's work is daunting, involving important work in eliminating and combining duplicative and sometimes ineffective tax benefits. That work will be difficult enough without becoming distracted by false promises of reduced complexity. I hope that my testimony will prove useful in directing the committee away from those distractions. Thank you.
All right. Thank you. Thank you all very much. The President's Economic Recovery Advisory Board issued a report in August of 2010, also known as the Volcker Report. And in that, they also underscore how complex our tax code is and even say that the cost of compliance is about 1% of GDP annually, and that those costs are actually more than 12 times the IRS budget, really about 10 cents on every dollar of income tax that is collected. I'm interested in one particular area right now. Mr. Viard, in your testimony, you note there's over 20 tax-preferred savings accounts and plans in the code, and the Volcker report also talks about those as well, and I just wanted to talk with you about a little bit more about them. From a tax administration standpoint, what's the impact of having so many different savings accounts and plans in terms of IRS oversight, taxpayer ability to really assess those and use those plans? your standpoint?
Well, thank you, Mr. Chairman. I think that the proliferation of accounts creates complexity at several different levels. The IRS has to promulgate regulations governing each of these accounts, and the rules are different with respect to the income limits and the contribution limits as to how much can be put into the account, and also the rules for withdrawal, what types of withdrawals incur penalties and such not. But I think the biggest grounds for concern arises at the individual taxpayer level. It's very difficult for taxpayers to choose between these accounts. And one of the interesting findings that I mentioned in my written testimony, which comes from the National Taxpayer Advocate's 2004 report, is that 30% of taxpayers who were eligible for a 401k and chose not to participate in it, cited the complexity as one of the reasons for not participating. So I think one of the real grounds for concern is that the social purposes that are intended to be achieved by these provisions is undermined if the provisions are too complicated for taxpayers to take advantage of. And as you mentioned, Mr. Chairman, this problem has been documented numerous times by the Volcker Panel, the National Taxpayer Advocate, the Joint Tax Committee, the President's Advisory Panel. So it's a long-standing problem, and I think we know the general approach that can be taken to simplify these accounts in terms of consolidating them and making the rules more uniform.
Mr. Viard and Professor Nellen, you both in your testimony point out the number and multiple tax breaks for higher education and the inconsistent rules and criteria for these tax breaks and the complexity they cause. Does the current design of these incentives, the complexity of them, and the fact that many of them expire frequently reduce their effectiveness? And I guess I'd like to hear from both of you your thoughts on that and what your comments might be on that. So,
yeah, I would say it's the confusion that the taxpayers would have as to what is available to them. The IRS instructions actually explaining these 14 provisions is an 86-page publication, which is just daunting. And they also, these incentives try to do a few different things. Some of them are actually designed to encourage you to save for higher education, and others are going to be used when you're currently incurring costs of higher education. They could be consolidated into, do you want to have just one credit, or should it be a deduction? Some of the provisions can be used together, some of them cannot. And I know there's been studies by the GAO and TIGDA that there are people that are overlooking these provisions. I think probably just being overwhelmed by them. If a person is not getting assistance from a paid preparer knowledgeable in these, they're probably going to be overlooked. Your comment earlier about a good number of individuals also use software. The software actually might not be pointing out, gee, maybe you should be saving for education, or maybe you have a choice here and you should be planning next year to try and use this particular incentive. So I think being left to an 86-page publication is just overwhelming. In addition, many of these individuals would also be dealing with trying to get other forms of financial aid through what's may offered at the university, through state or federal governments. So it's just adding to the overall complexity, because the tax code is one place they can get some educational support, but there's other places as well.
all right, thank you.
Thank you.
Mr. Viard.
I would really echo those comments and particularly underscore the point about the limited role of preparers and software. Once the year is complete and I've taken advantage of whatever provisions I may have availed myself of course the preparer or software can help me compute my tax liability correctly and to file the return properly. But it's much more challenging for the taxpayer to know what to do during the year, which options are available, which ones can be used without sacrificing the opportunity to use others, and which one will actually be most effective for the taxpayer's particular situation. Even if a preparer or software does offer advice on this, the advice may change from year to year, depending upon changes in the taxpayer's circumstances and, of course, the legislative changes that you've mentioned, Mr. Chairman. So I think the simple proliferation of these has surely undermined their effectiveness in achieving Congress's goal of promoting education.
All right, thank you. Mr. Levin may inquire.
Well, thank you very much for your testimony. Ms. Nellen, I think your reference to education is a good example. Clearly, we need simplification, but it can't be at a cost of meeting needed purposes. There's a reason for a credit so people will save, and of a grant for those people who can't afford it. And sometimes they're confused, and maybe that's one of the reasons why H.R. 1 reduced Pell Grants by $6.5 billion. So we can have credits to stimulate savings. I don't think that means we eliminate grants for people whose kids need help to go to college. And so I think we need to emphasize simplification, remembering what its purpose is. I think also, let me just ask you, do you know the percentage of taxpayers who use either 1040EZ or 1040A? Do you have any idea?
Actually, I just looked at that last night. It's about 60%, I think, use 1040. I think it's 28% use 1040A and 12% use a 1040EZ from data based from the IRS on 2009.
Yes, our data is about 41% use EZ or A, 59% use 1040. Do you know the percentage of those who file a 1040 use the standard deduction?
Yeah, actually, approximately 2/3 of individuals claim the standard deduction rather than itemize.
Mm-hmm. So it's clear for the vast majority of taxpayers, they use one of the more simplified forms, or they use 1040 and they use the standard deduction, right?
Right.
All right. I think we're all agreed about the AMT and the need to simplify it. Let me just say a word about the phase-outs quickly, because I looked at your chart, Mr. Villar. Now, I think we welcome your testimony. It was perhaps more modulated than some people expected. But it's interesting to look at this. The majority of the phase-outs passed in the later 90s. And that's when the now majority was in control. It may well be that phase-outs are often used for budget purposes to make sure that the cost is kept down, no?
Well, I think you're right, Mr. Ranking Member, that is one of the motivations that underlie the use of income-based phase-outs. But of course, it's always possible to avoid the use of the phase-out and then to make an adjustment to the rate schedule instead to keep both revenue and distribution roughly unchanged. I mean, I think the relevant issue in each instance is, do we have a reason on policy grounds why particular income groups should be denied the incentive for this particular type of behavior? If there is no reason to deny the incentive to a particular income group, then I think a phase-out is unwarranted. And if there's a concern then that a particular group, be it a high-income group or any other, is receiving a larger tax reduction than would otherwise seem appropriate, then of course an adjustment to the rate schedule can address that in a manner that is more transparent and that still allows this group to benefit from the incentive for the behavior that Congress has decided to encourage.
Mr. Johansson, you end up by saying Congress has killed the code with kindness. Let me just say, we have a problem with simplification, with complexity. I just think we need to be careful in our rhetoric. A couple weeks ago, someone said in testimony, government is a disease, and you don't say quite the same thing. I'm not sure we've killed the code with kindness. That would seem to mean that the kindness was somewhat irrelevant. I don't think you mean that. A lot of the provisions in our tax code take the mortgage interest deduction. Without it, the state that Mr. Camp and I come from, and I think most of us come from, would not have the middle class that it does today. Employer-based health insurance would never have been created on a broad basis in this country without a deduction. My time is up.
Time has expired. Mr. Herger is recognized.
Thank you, Mr. Chairman. I'd like to thank our witnesses for your testimony. When so many middle-class families have to hire professional help just to figure out what they owe in taxes, it's clear that something is wrong, and I hope this committee can work in a bipartisan way to clear away some of this unnecessary complexity. Mr. Viard, I'd like to explore the issue you raised about the phase-out of tax deductions and credits leading to high marginal rates. According to the Tax Foundation, when you add up the income tax, the payroll tax, the phase-out of the earned income tax credit, a family of 5 making $48,000 a year faces an effective marginal tax rate of 42%. In other words, 42 cents of each additional dollar they earn goes to paying federal taxes. It's my understanding that once the new health insurance exchange subsidies take effect, some low to middle income families could face a total marginal rate of well over 50%, and that's without taking into account state and local taxes or non-tax benefits like food stamps that are tied to income. Mr. Viard, what is the economic impact of these high marginal rates?
Thank you, Congressman. You've pinpointed an important problem that arises or can arise from the use of income-based phase-outs. Because the marginal tax rates are not being explicitly and openly adopted in the Internal Revenue Code, it becomes possible, I think, for them to be set at levels that are higher than would ever be agreed to if they were presented explicitly on the table. If we were to say, do you want a 42% marginal tax rate, I think that members of this committee and members of Congress would think long and hard as to the advantages and disadvantages of that. But with the use of income-based phase-outs, these marginal tax rates are often difficult to detect, and they vary across different households depending upon their circumstances and which tax breaks they're claiming. In general, marginal tax rates have the potential to discourage the earning of income, that is to say, to discourage work, to discourage saving, to discourage doing things in taxable form instead of in tax-exempt form. One thing that we do not understand well is how important the phase-outs are in affecting behavior. Precisely because they are complicated, some people have suggested that people may not be aware of them and that therefore their behavioral impact may be smaller than from explicit marginal tax rates. I'm wary of that argument, although I agree that most taxpayers do not understand precisely the rate they face, which is a problem of transparency. The proliferation of these income-based phase-outs, I think, contributes to the attitude that any attempt to earn additional income may trigger undesired tax consequences. So it creates an area of uncertainty that I think has its own set of disincentive effects.
Would that same reasoning also apply to the phase-outs you've described at the higher end of the income tax scale?
Yes, I think that at every income level, you would anticipate some disincentive effects, and the amount of those effects depends upon which choices are available to the taxpayers in question. At high income levels, there may actually be greater scope for disincentive effects because those taxpayers may have a variety of techniques available to them whereby they can reduce their taxable income, and the phase-outs may prompt them to take steps to take advantage of those strategies and lower their taxable income.
Thank you. That is very discouraging. It's very discouraging to those who would like to work their way up the income level better themselves. So what I'd like to ask both you and Professor Nellen is this. Would it be possible for us to reform the tax code in a way that achieves two goals at once, simplifying the tax system and making it easier to understand, while also eliminating these hidden marginal tax rates that have such a negative impact on the incentive to work?
I think some simplification certainly is possible. For example, on these phase-outs, there's a few areas of complexity. One is that most of them start at a different dollar amount, but also what that dollar amount is not always defined the same way. Some of them are based on what your adjusted gross income or AGI is. Some are based on what is your modified adjusted gross income. The definition of modified adjusted gross income can actually vary from incentive to incentive as to what that calculation is, just making it more difficult, for example, for a practitioner to explain to a client, this is how this is going to affect you. Instead, they'll just say, I need to go double check what the calculation is and run the numbers. So some simplification could occur just by standardizing the deduction as to how do you define what your income level would be. And it probably should just be maybe adjusted gross income, a dollar amount that's clearly right on the tax return to then base the phase outs. Some of the incentives,
I'm
perhaps.
sorry, his time has expired.
And thank you. It sounds very, very complicated to me. Thank you.
Mr. McDermott is recognized.
Jim?
Thank you, Mr. Chairman. I noticed from the sparsity of the audience that the tax lawyers must be sitting in their office watching this rather than being forced to come up here and listen to this. And as I look at the complexity of the tax code, it seems to me that those folks who have money have plenty of people figuring it out for them. They don't have any trouble figuring it out. And I'm sure that most of the complexity in the code is derived around the issue of how to get me out from under some of it. So I don't worry about the people at the top of the tax code very much, because I figure they'll be taken care of quite well. So my question to you is, which of the tax provisions affect the middle class and below would you try and uncomplexify? First, if you had one. I mean, I assume this hearing is on the level, and it's really about making it better for the middle class in the country rather than for the people in the top 1% or 1/10 of 1%. So for the middle class, which one would you try and decomplexify?
Well, Congressman, I think that the area that seems the most promising in terms of simplification is to address the savings and the education and the family incentives. As Ranking Member Levin mentioned, these provisions are significant to the middle class, and I think it's the middle class households that are affected by the complexity that I and the other witnesses have described. So I think that would be a promising area to begin in order to provide simplicity for middle class taxpayers.
And give me your solution. I mean, we're gathering ideas here. This is a hearing. So I'd like to hear your ideas about how you would decomplexify it.
Well, to take the savings accounts, for example, the basic approach that I think holds the most promise is one that's been outlined in various forms by a number of people before me, and that involves simply consolidating the 20 different types of accounts. We fundamentally want to encourage saving through employer-based plans. We want to encourage saving by individuals for retirement, and we want to encourage saving by individuals for a range of other purposes such as health and education. Those three purposes can probably be achieved by offering 3 different types of tax-preferred savings accounts instead of 20.
Replace 3 with 3 new ones?
No, I'm sorry, replace the 20-some accounts that currently serve those 3
with
purposes with 3 accounts, and then try to make the rules as uniform as possible across them. The President's Advisory Panel on Federal Tax Reform outlined a reform along these lines, and options have been discussed by other groups as well that are very similar.
Explain to me why this committee, I mean, nobody sits on this committee to think of how you can make these plans more complex. So why did 20 plans get developed? Explain to me that process.
I'm not certain about the answer to that, Congressman. The accounts have arisen over the years. I think there's been a tendency at each point to address some specific problem in isolation from the accounts that already existed. And I think the same process has occurred, for example, on the education incentives. What I think this hearing offers is the opportunity to sit back and say, regardless of how we got here, let's take a look at these 20 different accounts and see if they actually serve 20 different objectives. And I think the answer is pretty clear that they do not. And we now have a range of organizations of diverse ideological backgrounds and those that are non-ideological saying there are opportunities to simplify these, to step back and say, let's not be shackled by the history of how these have developed, but instead try to find ones that will most effectively and simply achieve the purposes that Congress has set forth.
Mr. Buchanan, do you have any comments? Dr. Buchanan?
Yes, thank you, Mr. McDermott. I agree with most of what Mr. Viard just said. I do think that the history of this is a lot of responses to individual concerns, or we start to think, okay, people aren't saving enough for health emergencies, and so we create health savings accounts, that kind of thing. I do think that it makes total sense to just stop and shovel out the stables every now and then, and say that there's a lot of accumulated mess, and it is appropriate to go back and combine them into thematic groups, take the different groups and combine them into one type of tax credit. If we believe that savings needs to be increased for retirement, then we should have a retirement savings incentive, one of them.
All right, thank you. Mr. Johnson's recognized.
Thank you, Mr. Chairman. I think the word is simplify. I understand that word better than I do that other one there using over there, don't y'all? Hey, Ms. Nellen, I appreciate your comments regarding the standard mileage rates. You rightly said in your testimony, the IRS can increase these rates as it did last in 2008 when gas prices surged to $4. I paid $4 yesterday, so it's there. As you may know, last month I called on the IRS to increase the mileage rates due to higher travel costs brought on by surging gas prices. This headline by CNN Money has it right. Quote, gas prices in the firing range of an all-time high. So for the sake of those who use these rates, particularly our nation's small businesses, I would hope that the IRS does the right thing and provides relief from the near-record gas prices by increasing the mileage deduction. And I hope you would agree with me on that one. But let me ask you a question. Since about 90% of the budget cost of earned income tax credit is in the form of outlays rather than credits for actual tax liability, it appears the provision effectively is a credit against payroll tax rather than income tax. Would you agree that a simpler way to deliver this tax benefit would be to reduce payroll tax liability in the first instance, rather than requiring taxpayers to engage in this circular flow of taxes and credits within the government?
Thank you, Congressman. On the earned income tax credit, you're correct that that's really refunding all or some portion or maybe even beyond what the Social Security is. Actually, I provided a paper on that topic to Joint Committee when they did a simplification study back in 2001. I and others had suggested that perhaps if they could just not have to give the money in the first place because they're giving it through their payroll withholding, but to stop that payroll withholding so they would actually also have it on a weekly, regular basis, that could simplify what the earned income tax credit is intended to do. Now, it would cause a few complexities for employers, but I think that could be worked out. And there's probably some other improvements to the earned income tax credit that could simplify that. But if you could just stop, taking their money, only to give it back to them at the end of the year, that hopefully could simplify the process.
Yeah, there's a whole bunch of things like that, isn't there? I mean,
Well, the earned income tax credit is a good example of that because it is, in essence, refunding
and
the
we
Social
need her
Security.
to help us simplify the tax code. What do you think? Thank you for your comments, Mr. Chairman. I yield back.
Thank you.
All right, thank you. Mr. Neal's recognized.
Thank you, Mr. Chairman. Professor Nellen, I understand that you're testifying today on behalf of AICPA, and I have to say that your statement in support of repeal of alternative minimum tax is music to my ears. I've staked a career here on that issue. I first filed a bill years ago that would, at that time, have repealed AMT when it only cost a few $1 billion. Now it's overtaken the regular income tax collections. Some of us have argued that the decision in 2001 not to deal with AMT saved the overall cost of the Bush tax cuts, and that the drafters did so knowingly. In fact, in 2001, a Treasury Department economist warned, quote, indexation of AMT parameters, however, would not completely eliminate the sizable increase in the percentage of AMT taxpayers through 2010 because of the post-2001, Growth and Tax Reform Act provisions. Even with indexation, even with the percentage of taxpayers subject to AMT would increase by more than 200% between 2000 and 2010. So while the lack of indexation has always been a contributor to the AMT problem, massive cuts in the regular tax were a major contributor as well. You've suggested that all new tax bills require the impact of AMT to be revealed. Can you explain how this provision would work and why AICPA believes it's important?
Thank you, Congressman. When there are new provisions added, the child credit would be an example of that. That was added roughly 10 years ago, and when you're going to give individuals at what then was a $500 credit, now it's a $1,000 credit temporarily up to $1,000, that would then generate the question, well, now your regular tax has gone down even lower. Is that going to make you more likely to pay AMT? If that is the case, then I think it needs to be evaluated. Do you want to put in the child credit in the first place? Because that is actually then causing the AMT to do what it should do. If your tax goes below a perceived minimum, you're going to owe the AMT.
Okay. The Growth and Tax Reform Act at that time neither fostered significant growth or tax reform, largely because there was no scrutiny of what the provision in the long term meant. And today, AMT, as I've already indicated, now is the tax code in so many ways. And Mr. Villar, you were nodding your head, so I'm going to give you a crack at this as well.
Well, Congressman, first let me applaud you for your work in trying to repeal the AMT, which I think is the ultimate solution to this problem. But I do agree with this proposal to have the AMT impact of new provisions looked at. And I think it's particularly important because it almost helps emphasize why the AMT is a flawed provision to begin with. If a new tax break is being offered and a decision is being made not to allow it under the AMT, whether it be to reduce the revenue loss or whatever other purpose might be served, I think that it's appropriate for members of this body and for members of the public to ask themselves, why is the provision not being allowed under the AMT? If it is intended to serve an important public objective, then should it not be available to all taxpayers, not just those who are subject to one of two parallel tax systems? And if it does not serve a valid purpose, if it is abusive in some sense, if it's a loophole that we want to curtail, then why is the provision being adopted in the first place? So I think that this suggestion offers a good way to focus that question and hopefully lead to the answer that we really want this provision to either be available under both systems or none. And then following that logic, I think would lead one to conclude that the ultimate solution is to simply repeal the AMT as you have proposed.
Mr. Johansson, you're also nodding in the affirmative.
I'm nodding to the affirmative because I have kind of reflected back on the somewhat lack of transparency that the AMT code has allowed public policymakers to hide behind while speaking and saying we're lowering taxes on one front, it's actually increasing on the other. So yes, I am agreeing with exactly what they're suggesting here.
Do any of you know what the cost of the 2001 bill would have been have covered through 2010 with AMT?
I believe that there would be roughly a $600 billion or greater cost for the AMT relief. It may be larger than that. It's certainly a significant item.
Yeah, thank you very much. And Mr. Buchanan, lastly, our Republican friends have expressed a willingness to use the vote on the debt ceiling as leverage to advance some policy goals. In your opinion as an economist, would the economic benefit of moving to a 25% top rate for individuals be worth flirting with default on the debt?
And time's expired, so just answer quickly, please.
Nothing would be worth threatening the creditworthiness of the United States.
All right, thank you. Mr. Nunes is recognized.
Thank you, Mr. Chairman. I actually want to pick up where Mr. Neal left off, and maybe we'll start with you, Mr. Viard. In terms of the top rate, and this can go to all of you throughout the 5-minute period that I have. When we look at, if we were to simplify most of the code, so in other words, as you said, go from 20 different types of savings accounts down to 3, and simplify take a lot of the inequities out of the code, out of the code as much as we possibly can. And I don't know what this Congress can do, and I don't know what the Senate would agree to, and I don't know what the President would sign. So this is basically hypothetical. But you guys, you've spent a lot of time thinking about these issues. And if you could simplify the code, what would or what should the top marginal rate be? And how would you structure the code if you could?
Well, Congressman, I think it's actually important to draw a distinction between simplification and base broadening. The type of simplification that we're discussing here today, I think, would not necessarily lead to significant reductions or necessarily to any reduction in the statutory rates. For example, if you did simplify the 20 tax-preferred savings accounts into 3, that does not necessarily mean that they would be less generous.
Right.
That would be a decision that Congress would have to make, and particularly the members of this committee. So you could decide to have 3 accounts instead of 20 to make it easier for middle class and other households to use them, but if they have the same revenue loss, then you actually do not achieve rate reduction. Rate reduction instead requires a much more significant fundamental set of policy choices associated with base broadening, things that probably go far beyond what we've been discussing in our testimony. Someone would have to make decisions, for example, does one curtail the tax preference for home mortgage interest? Do you curtail the preference for employer-provided health insurance? Do you curtail or eliminate the state and local tax deduction?
Well, what do you think, Mr. Viard? I mean, you've worked on these tax issues a long time. I've worked with you on a couple different tax issues over the years. What road do you think the Congress should go down? Do you think we should broaden the base and really simplify the code?
I do believe that the base should be broadened, Mr. Congressman, although I think that even an income tax with a broader base is inferior to consumption taxation. But personally, I do see areas for broadening the base in terms of eliminating the state and local tax deduction, restructuring the preferences for employer-provided health insurance and home ownership in ways that are more effective in providing basic health insurance and allowing people to become homeowners, rather than encouraging the spread of expensive homes and expensive health insurance policies. And I think if you adopt those type of measures, you can lower rates, certainly by several percentage points. Again, though, I do want to stress, those reflect fundamental policy debates that clearly are unrelated, at least at first glance, to the simplification that we're discussing here today.
Mrs. Nellen?
Yes, I do agree with that. Generally, though, a broader base and lower rates does also help the tax law meet additional principles of good tax policy. Things would be more transparent. If you are removing certain provisions, that makes it more clear, well, the tax law won't affect your decision-making as much as it should not be affecting your decision-making. Make it more neutral. So I think there should be consideration, as happened in the '86 Act, of lowering the rates and broadening the base. That is one way to get simplification. But there, as Mr. Verard says, there are ways to get simplification. So far as what the ideal marginal tax rate should be is an important policy debate, and should consider distributional effects as well among the different income categories.
Thank you. Mr. Johansson?
I can tell you that last year was the first year I had clients in my 20 years of working with clients actually say what I've often heard of in economic theory, which says as we approach a higher and higher tax bracket at the top, that people will be disincentivized for additional units of work. And so probably 4 or 5 different clients came to me last year and said, how can I next year reduce my income, either by working less or by not creating, something that otherwise I might be creating. And so I don't know what the ideal rate is. I do know that as we approach 39.6 this year, it began to get people's interest pretty significantly.
Thank you. Mr. Buchanan?
When we discuss base broadening and rate reduction, that's usually done in the context of wanting to be revenue neutral. And I'm a bit confused by that discussion in the context, the broader context here, because as I understand it, part of the concern overall, especially later this afternoon apparently, is going to be about reducing long-run deficits. And so I'm not sure whether or not the...
So you would prefer the code to stay complex, rates to stay where they're at, and not broaden the base?
All right. No, absolutely not. What I would prefer is that we broaden the base and think about how that would affect revenues and therefore the long-run deficit picture.
All right, thank you.
Thank you, Mr.
Mr.
Chair.
Becerra is recognized.
Thank you, Mr. Chairman. Thank you for your testimony. Let me see if I can ask you all to help me do something. Mr. Viard, give me a number between 1 to 3. Just give me a number between 1 to 3. 2. Ms. Nellen, give me a number between 1 and 8. Helen, is it Nellen? Ms. Nellen, a number between 1 and 800. 700. And Mr. Johannesson, number, or just give me a top or bottom. Top. Okay. Let's see. Here's a tax code. Number 2, 700. And top. So top is here. We're looking at Section 1361 of the tax code, effective election on corporation. I suspect this particular section dealing with corporations won't affect most individual tax filers. And I suspect we could go through this routine about 1,000 times, and most of this random selection of a provision in the tax code would not affect most tax filers. In fact, if you take a look at the forms that are available to tax filers, the 1040EZ, the 1040A, and the 1040 itself, most tax filers can file using the simple tax form, the 1040EZ or the 1040A. The 1040EZ, if I'm looking at it properly, and I have it right here, it has 13 items to be filled out. That's it, 13 items. Now, the 1040, of course, is the one used by folks who have higher incomes, that has a lot of additions, a lot of supplemental filings with it. But the 1040EZ, which the IRS in its instructions to tax filers says to them, you can use this 1040EZ form if your taxable income is below $100,000. And by the way, 87% of the 143 million plus American tax filers earn less than $100,000. If your filing status is single, or if you're married and filed jointly, if you're under the age of 65 and not blind, that's a pretty easy one to determine. You're not claiming any dependents, and your interest income is $1,500 or less. With today's interest rates, you're probably having to earn pretty good interest to collect $1,500 in interest, some probably $50,000 in a savings account of some sort, or some kind of something that gains you an income, an interest income. So probably not a lot of folks who are at 100,000 or below, 87% of filers, who really have to go beyond the 1040EZ with 13 questions, or perhaps the 1040A. The reality is that the more than 2,300 pages in the tax code aren't for people who earn $100,000 or less. It's for those who make more, who need to use the 1040 because they have lots of different ways to reduce their tax burden, to the point where Warren Buffett has said that he likely pays a lower income tax rate than do the assistants and secretaries that work for Warren Buffett. And as the Bloomberg Businessweek article of April 7th said, the top 400 income tax returns, so the 400 wealthiest Americans by income, while their rates, their statutory rates might be in the 30%, their effective rate, what they ultimately paid after they used all these tax shelters and so forth, was just under 17%. That's higher than a lot of those middle-income families that would file the easy 1040EZ form. In fact, those 400% richest Americans pay at a lower rate than the next set of wealthy Americans, who paid probably about 23%. So the richer you get, the lower your taxes. And the poor average worker who gets a paycheck every week or every month doesn't have to worry about trying to sneak through some of the tax code, because his or her money is automatically taken out of the paycheck. And so as we talk about complexity, I think we have to remember something. The complexity is created not by the average American making $100,000 or less. It's created by all those folks who make much more money, who want to keep as much of their money with them as they can. And the reason you have 2,300 pages is not so that you can help the average stiff who works every day 9 to 5. It's to help the guy who doesn't use the 1040EZ, who is trying to shelter as much as he can. And so I hope that as you keep coming to testify before us, you'll help us make sure we navigate this so we don't hurt the middle class as some try to protect the wealthiest Americans who are doing very well on their own.
Thank
Thanks
you.
very much.
Mr. Teaberry is recognized.
Thank you, Mr. Chairman. Mr. Viard, I kind of want to say OH, based upon your bio and your days at Ohio State. But you were there after I graduated. You may have seen yesterday an Ernst & Young report come out. Familiar with that at all? It was a report regarding our tax code.
I don't think I saw that report.
All right, well, it had to do with the corporate tax code and pass-through entities. About a month ago, we had a hearing here with respect to pass-through entities. And today, the President is going to tell us something. He has talked before about doing corporate tax reform, and some of the administration have talked about doing only corporate tax reform. In your view, looking at our tax code today, if we did only corporate tax reform and didn't deal more comprehensively across the board, would that create inequities, in your opinion? More inequities than we have today?
I think that would depend on how that reform was done. I certainly think that dealing only with the corporate income tax would be only a partial solution to the problems that affect our tax system today. There's clearly reforms that are needed for individual taxpayers of the type we've been discussing here, as well as some that we have not been discussing. As I said at the beginning of my testimony, I was not going to discuss the problems faced by individual owners of pass-through firms, but in fact those regimes are needlessly complex. It was interesting that the tax provision that Congressman Becerra chose at random was a provision pertaining to S corporations, and it's clear that we have some very complicated regimes governing pass-through entities. We have a partnership regime, we have an S corporation regime, each of which is complex in itself, and each of which differs from the others. And I think that it's absolutely right, as Congressman Becerra pointed out, that the individuals directly affected by this are high-income individuals in many cases. And so I don't know that we need to feel compassion that they are struggling with this complexity. But what I think all of us need to worry about is whether, as citizens and as members of an economy, whether the efforts of those individuals should be devoted to dealing with intricate tax provisions, or instead should be devoted to business purposes, to the hiring of new workers, to the creation of new products that are demanded by consumers.
That's where I was.
And I hope that simplification.
And that's where actually I was heading, because the report that came out yesterday showed that a majority of business job creators and business owners were pass-through entities, including S corps, and that if we raise the top rates on them at the same time we were reducing corporate rates, we would actually impact the number of job creators in a negative way. And not only the complexity issue that's been talked about today, but also raising the rate would have an impact on our economy. And so, Mr. Johannesson, did I say that right? For someone who gets his name mispronounced every day, I'm sensitive to the way you pronounced your name. You said something in response to Representative Nunes I'd like you to say again with respect to something you heard this year from some of your clients with respect to the tax code. Can you repeat that again?
I believe what I said was that for the first time in my 20 or so years that folks actually were asking what they could do to minimize their earnings potential because they wanted to try and avoid being pushed into the 39.6% tax bracket.
That is the biggest headline that should come out of this hearing today. My mom and dad came to America, as I've said before, for a better life. And in America, there was endless potential. And when you have people, job creators, entrepreneurs, people who are trying to better themselves, take the tax code and go to one of their advisors and say, how can I minimize or work less so I don't get penalized by my government? That is an incredible statement. Representing the AICPAs, Ms. Nellen, have you or any of your members heard that, or do you see a problem within our tax code that creates this thought process?
Congressman, I've not personally heard that. I've heard stories of that. I do think in looking at the rates, I think it's going to hear more of that because there are some additional rates coming into effect. For example, Medicare tax coming into play at 3.8% on certain investment income. I think some might question, well, what exactly is my marginal rate? And I think just seeing additional taxes does perhaps also raise the question Mr. Johansson's hearing from his clients.
All right, thank you.
Thank you. I yield back.
Mr. Pasquarello is recognized.
Mr. Buchanan, good morning.
Good morning.
There's nothing more notoriously and pointlessly complex than doing your taxes twice. And you know, my friend, Mr. Neal, has referred to the, in my own district, tens of thousands of people. New Jersey ranks #1 in AMT filings. There's a reason for that. And my own district, which is a moderate income to low income, it ranks 50th, within the 50th in the entire nation in AMT's file. So there have been numerous attempts to index the AMT, to patch it. There have been numerous attempts to appeal it. It's almost biblical. The common theme was that all of these policies were going to be paid for. So the President's 2012 budget paid for the AMT patch for 3 years by eliminating tax breaks for specific oil companies and millionaires. Very specific, rather than what we usually do on both sides of the aisle, eliminating loopholes, which can mean anything under the sun. So, the Republican budget, Mr. Ryan's budget, bootstraps the $1.5 trillion AMT repeal to the extension of the millionaire tax breaks. Find that to be most interesting. At a total cost of $4.2 trillion, according to the Tax Policy Center. That budget also looks to lower the top rate to 25%. Mr. Buchanan, an AMT repeal was included in the $4.2 trillion tax break in the Ryan budget. Very specific. How much more would it cost to lower the top individual rate and top corporate rate to 25%? Do you have any idea?
It would be in the trillions.
Well, the answer is 2.9 trillion over 10 years, in addition to the 4.2 trillion already in the Ryan budget. That's quite a bit of money, isn't it, Mr. Buchanan?
Yes, sir.
For a budget that's supposed to get us to the promised land.
Yes, sir.
It's not getting us to the promised land. What are the options of paying for this rate reduction? What tax credits or deductions will have to be eliminated? All of them. The President's Debt Commission has a top rate of 25%, but it eliminated all tax expenditures, did it not?
Yes.
Okay. If we eliminated many of the complex tax preferences, such as the Earned Income Tax Credit, a favorite of President Reagan, or child tax credit, or the mortgage interest deduction, while extending the Bush tax cuts for top earners to pay for a rate reduction, wouldn't lower and middle income individuals have a higher tax liability in the end, Mr. Buchanan?
Yes, sir.
Or else where would the money come from, Mr. Buchanan?
I couldn't tell you. As far as I can tell from these plans, it boils down to saying One way to simplify is simply to raise the net tax burden on those making less than $200,000 a year.
Of course, it has to come from someplace,
Yes.
or else we'll do what we did for 8 years, not pay for anything.
That, as I understand it, and my earlier response to Mr. Nunez was based on this, that when we're talking about eliminating these various preferences, we're broadening the base, but as you described, this is in a context where we're broadening the base in order to make up money that is being lost in terms of the rate reduction and the elimination of the AMT.
Thank you so much, Mr. Buchanan, and I yield back, Mr. Chairman.
Thank you. Mr. Davis is recognized.
Thank you, Mr. Chairman. I'd like to follow up on Mr. Herger's question for Dr. Viard and Ms. Nellen about how phase-outs might actually discourage work and earnings. I serve as the chairman of the Human Resources Subcommittee. We're looking at some of the arcane and complex interlocking relationships between the silos of the various programs that create some real challenges, I think, for the folks who want to get out of poverty or want to get off of assistance and build themselves a future. You know, we know the tax code has many provisions for low-income families. As Ms. Nellen's testimony indicates, however, there's no consistent structure to ensure that the tax provisions work together more harmoniously or holistically. You know, meanwhile, parents who qualify for those tax benefits may, in addition, receive food stamps, welfare, Medicaid, and other benefits that also vary based on income. Given all that, it's got to be bewildering for parents to try to figure out if working and earning more will actually make them better off. With all these program interactions, it seems that some families with very modest incomes can actually face an effective tax rate of more than 100%, meaning that they're made worse off if they work and earn more, which is counterintuitive to what the goal of the, our intent to help them is to begin with. My question is this: have any of you reviewed how phase-outs for tax and non-tax benefits discourage work, since earning more may cause someone to lose both tax benefits and other benefits as well? And should we be looking at this more holistically so low-income and modest-income parents can actually end up better off from working and earning more?
Congressman, it's a good question. I think it's important to think about when the taxpayer would also even be aware that they've actually lost the deduction. A lot of times that might not happen until they're filing their return. As they're proceeding through the year, they might be thinking, oh, there's a particular incentive, I'm going to qualify for that, and might not find out, for example, even getting a year-end bonus might be enough to kick them out of that, and they didn't know that earlier on in the year. So that is one problem with the phase-outs. It's not something you always plan for. Now, some individuals, high income, know that they're beyond all the phase-out levels. They don't even think about getting those. But I think people that, and the levels where you're intending to get those benefits, it's just the uncertainty because of that phase-out. And sometimes they don't know that until it's happened once. Then they're more likely to pay attention to it and either just count on, I'm not going to get that particular incentive. I'm not sure it's probably too complicated to say I'm not going to earn more money, because they might lose one incentive but not another one because the phase-out levels are all different.
Mr. Beard, you'd like to comment?
Yes, Congressman, I think you're right about needing to take a holistic approach to this, and it is very complicated because just as we have a proliferation of phase-outs on the tax side, we also have a proliferation on the spending side. There are numerous different anti-poverty programs. You mentioned some of them, the food stamps, public housing, temporary assistance to needy families, and so on. And any given household could, at least in principle, be eligible for a number of them. And some of the same complexity problems and marginal rate problems arise there as well. I think that if we did try to consolidate along both sides of the system, that we at least could make more informed and transparent choices about the marginal tax rates. The one note of caution I do want to put into the discussion, though, is this. It is difficult to avoid high marginal tax rates in these low-income programs because you really face a difficult trade-off. If you choose to have low marginal tax rates, you either need to reduce the benefits that are paid to the households with the very lowest incomes, or you need to have the benefits continue into higher income ranges at a greater cost. And so one of the forces that has driven policymaking towards these high marginal tax rates is the desire, on the one hand, to provide adequate benefits to those at the very bottom, but on the other hand, to have those benefits phase out before the programs become too costly. So it's a very difficult trade-off.
Wouldn't it make more sense to step to maybe a third-way choice on that question, actually look at the process itself? One thing that I've noticed is coming from dealing with integrated systems that have very little information error. There's no system in the whole of government to be able to roll up, for example, a recipient of benefits to see what they get across the board. And so I suspect you could get away from that. I mean, just from a CPA's perspective, would it be helpful if we had statutory language that would allow data to be matched and shared across agencies and programs? Because we don't now. And I think that's one of the reasons we have 10% improper payments with our entitlement programs at the moment.
Certainly, so far as transparency, having the data would be more useful to help answer these particular questions. And it's just in different locations, when does it come together into one format? But transparency would say, let's bring all that together and analyze what's actually there and where people are getting their particular benefits.
That's going to be one of the questions we're going to have in the coming months as we talk about entitlement reforms. Thank you, Mr. Chairman.
Thank you. Mr. Stark is recognized.
Thank you, Mr. Chairman. I have to make this comment with due regard for the expertise of the other witnesses, but I have on some notes here from my staff, I won't tell you which one, that says that Mr. Viard is the one heavy hitter from the GOP witness list. Congratulations. That's a high compliment from the Democratic
Well,
staff.
thank you, Mr. Congressman, but I don't claim any expertise greater than my fellow witnesses here.
Okay. I guess that what we want to hear from all of you is how we could simplify, as Mr. McDermott has suggested, the code for the majority of the taxpayers, which I guess is in the 90%, who use the simplified forms. There's discussions of not taking money out of their paycheck every month, but I guess I'd ask the witnesses, wasn't that initiated because so many people ended up at the end of the year not setting any money aside? Then they had a tax liability, and they were in the soup. I mean, they just didn't have the money to pay their tax. Was that not the basis of the payroll withholding? Go ahead.
Yeah, Congressman, the reference actually was to the earned income tax credit, not to regular tax payments. Those should be done through withholding to ensure that they are done. But so far as an earned income tax credit, if what happens is that the person from paycheck to paycheck is
Right.
paying FICA tax only to get that returned at the end of the year through a somewhat complicated process, is there a way they could not have that FICA tax withheld in the first place?
Well, I want to thank the panel for their contributions, and as I say, it's going to be a difficult question for this committee to figure out how we can simplify the tax return without, say, doing away with the homeowners' interest deduction, things like that, which politically would be I think, a firestorm that none of the politicians could weather. Thank you for your contributions today. Mr. Neal, would you have further questions? I'd be glad to yield the balance of my time. Thank you. You are back, Mr. Chairman.
Thank you. Mr. Buchanan is recognized.
Yeah, thank you, Mr. Chairman, for holding this important hearing today, and I want to thank all our witnesses up front. Let me mention, there's a lot of discussion about C Corps and having the highest rates in the world. I guess Japan lowered their rates, so it leaves us the highest rate. But and I've heard the President and many members on this committee talk about lowering corporate rates so we'd be more competitive here and abroad. But can you lower corporate rates, I pose this to all the witnesses, without not dealing with all these pass-through entities? I'm someone that's been in business for 30 years, but in the 80s it was popular. Everybody had a sub-S from C Corps, and then everybody moved to, at least a lot of the entities I had were LLCs, which are all pass-through entities. Do you see any scenario, based on your expertise, where they would lower corporate rates, but not at the same time lower pass-through entities? Because a lot of those folks are the job providers. And Mr. Buchanan, I'll start with you first.
Compliments on your name, Mr. Buchanan.
Thank you.
Yes, I do agree that there is a lot of slippage between the different types of business entities, and therefore changing the C Corp rules is going to create incentives for people either to move into or out of being a C Corp and instead becoming a pass-through entity. The permeability isn't perfect, of course, because at this point there are people who argue that C Corps have no reason to exist under the existing incentives for pass-through entities, and yet C Corps do continue to exist. But I certainly agree with you, Mr. Buchanan, that the business tax reform would need to be thought of as an integrated whole.
Yeah, and if you just take that one step further, when you're looking at trying to raise rates on the rich, basically a lot of those are job providers. So if you're looking to lower C Corp, and then you have to deal with pass-through entities, that goes right down to the individuals. So that's the point. Mr. Johansson?
You know, I would rather cede my time to my colleagues here on the panel who probably have more expertise in that area.
Good. Ms. Nellen?
One thing, the rates actually as to which is higher, the individuals or corporations, has changed over time, and people do react to that. Prior to the 86 Act, the rate on individuals was higher than corporations. That switched after the 86 Act, which actually then brought about an increase in number of pass-through entities, particularly S corporations and partnerships. And I would guess flipping that again would cause, again, some change in behavior. So we do have a record of showing that when one is higher than the other.
How could you, in a competitive world like we all live in, have two people competing in the same industry? A C Corp, in theory, could do a lot less in revenues, and a pass-through entity could do a lot more. And if the C Corp was paying a lot less in taxes than the S Corp or the LLC, how does that work in our competitive environment in terms of doing business? To follow your logic.
Well, I think some pass-through entities perhaps would move to the corporate form, but you also have with C Corps that they are still subject today to double taxation, which is another issue that really needs to be addressed along with the consideration of lowering the rates.
Mr. Villar, do you want to comment on that? Just
Yes.
The idea of lowering C Corp rates here and abroad and not dealing with everything else? I think you've got to deal with them all, my opinion is, but go ahead.
Well, I think, Congressman, this question highlights, again, some of the complexities that have crept into the Internal Revenue Code in ways that maybe were not intended. I think that in general, C corporations are taxed more heavily than pass-through entities because there is two levels of tax, yet there are circumstances in which C corporations can actually be used as tax avoidance devices, particularly if earnings are not being distributed and gains are not being realized. So what this ultimately tells us is that we do want, ideally at least, a holistic solution, something that will try to unify the treatment of different business enterprises and allow the choice of business form to be made without reference to tax considerations, so that different firms, as you say, in the same industry or in different industries can actually compete on a level playing field, be subject to a single level of tax that's really uniform across different types of entities.
And one other quick question, as I got a few minutes or a minute left, whatever it is. The IRS says the average person, it takes 21 hours to fill out their return. In fact, I was reading something where the USA editorial page had commented that for the new iPad, they got one page of instruction, and the 1040 form has 172 pages of instruction. What would be one or two things that, in terms of tax simplification, would you suggest or do? And we'll start on the other end, Mr. Villar.
Well, again, I think the thing that most cries out is really trying to consolidate these different incentives for savings and education and children, which really don't have a rhyme or reason to them at this point, crept up over the years, and you have multiple accounts and incentives that are serving only one or two purposes.
Mr. Nellen, what would you...
I'm sorry, the time's expired. Mr. Paulson's recognized.
Thank you, Mr. Chairman. I also want to thank all of you for being here today as a part of this testimony. I find it very interesting. I'll start with Mr. Johansson, if I could. As a part of the work you do, you obviously advise clients, and we have so many provisions that are set to expire in 2012, which you heard about. Many of those that you referenced, dividends, capital gains, and these issues that do affect decisions that go into the future, and a lot of these are in flux right now. I mean, how do you advise your clients just knowing that there's the frequency of the changes that are out there and the provisions that expire. I mean, how do you go about actually advising your clients short-term, long-term?
Right. Planners by our nature are kind of used to changes in people's plans because that's what we live in that world of uncertainty. But from a longer-term perspective, the way that we're building our plans today, which many times we're looking at folks' retirement or their estate, is by taking the code as we know it exists today, the top tax brackets, and kind of planning out into the future as legislated. We have a software that helps us do that in that environment. In the short term, it requires a lot of looking at numbers, reviewing numbers, trying to make best guess of the direction of where the Congress and the economy is going. And so it requires a lot of time and energy. Last year in particular with Roth, and as we were heading towards a new tax bracket, whether we would have folks convert or not, that was a significant back and forth dialogue.
So it seems like it's pretty clear that given the sense that you've all talked about how individual taxpayers are frustrated with the complexity and the forms they fill out, whether it's the phase-out provisions or anything else, as a profession, you're also navigating the waters and having complex calculations and staff and everyone trying to advise your clients. So it's part of that whole complex situation, right, as a part of the tax
Yeah, I think what most intrigued me about this testimony today is the idea of a more permanent structure than the one that's been in flux. And when you look at the wave of folks moving towards retirement, just the baby boomers alone, and to have some sense of how to plan, somebody mentioned about 21 hours for the average tax return. That's more time than most people do on their financial planning. I mean, they spend more time on their family vacation than they do on their tax return. And so to be able to have a more permanent structure where people can peg towards what their retirement lifestyle needs to be with taxes built in is hugely important with the sheer number of people working towards retirement, and will be an issue for not only seniors today, but the baby boomers as they move through the pipeline.
And Ms. Nell, maybe, you have a different relationship with your clients, but do they face similar issues? I mean, demographics are a fact, and we can't change demographics, but can you comment on that?
Yes, Congressman, I think part of it with practitioners is just being able to explain to their clients as to what the rules are today, what they might be tomorrow, or in 2 years out, 3 years out, and the uncertainty of being able to plan in that context. It does make it quite difficult. Having the caveat answers about should I invest this way or that way, when should I sell my business, this year, next year. A lot of caveats have to be put in place, and I think the client, end of the day, is like, I'm not sure what that means. But I agree, permanency would certainly help. Less choice, where they don't have to choose between 14 different provisions, but it was very clear, if I do this, I will get this particular education incentive or get this retirement saving, whatever it might be. The added certainty, I think less choice or options would be helpful.
Okay, and Professor Nell, I know you recently wrote an article for AICPA that I think it was called Rethinking the Income Tax Calculation. There's a lot of talk about tax expenditures right now in the context of overall tax reform and broadening the base and eliminating a lot of these tax expenditures. But, you discussed this as a part of what you wrote and the complicated interaction of the rules that affect income tax calculations, as well as the question of what ultimately is a tax expenditure. Can you just explain that interaction a little bit, as this conversation, I think, is going to occur, obviously, in this committee as a part of tax reform. Do you have any suggestions on how we can move forward, keeping in mind some of the issues?
One thing to point out, we hear a lot about this $1.1 trillion of tax expenditures out there. I'm not sure everybody knows exactly what a tax expenditure is. Generally, that does not include the standard deduction or personal exemptions. Those are viewed as way part of a standard income tax system. So far as I think other misconceptions out there, I think there's a lot of thought that corporations get most of those incentives, where actually the bulk of those dollars is actually for individuals. Also, when we hear $1.1 trillion of tax expenditures, that's actually income tax. Some of those would actually generate, I guess, additional payroll tax too. If, for example, certain employer-provided exclusions were to be considered all or partly taxed, it would also generate some payroll tax. But I think to talk about tax expenditures, it would be helpful if there was a broader understanding of what those are, so the public would understand what that's getting at, who uses those tax expenditures, and how do they affect what the tax rate is.
All right. Thank you.
Thank you. Mr. Marchand is recognized.
Thank you, Mr. Chairman. I represent a largely suburban district, very professional, upper middle class, and I would say to you the largest reason why these professionals have to seek assistance with their tax return is the alternative minimum tax. The largest deduction most of my constituents have are their property taxes and their house payment. So I don't think we can have any meaningful discussion about simplifying the tax code without having a discussion about the AMT, especially in my district. Mr. Viard, is that how you say it? Is there a way to calculate the amount of money that is gained by virtue of the alternative minimum tax? Is there a baseline where you can say, if there were no alternative minimum tax, here's the amount of money was collected, but because we're collecting the alternative minimum tax on top of it, it represents what percentage of the total tax collected?
It is certainly possible to compute that number, Congressman, and in fact, the Urban Brookings Tax Policy Center, which is probably the most authoritative source of data about the AMT and about many other tax topics, has computed that. I don't have that number with me offhand, but one interesting fact is that we have reached a point where it is actually cheaper to repeal the regular income tax than to repeal the AMT. Now, the bulk of the revenue that's being collected each year would be raised under either of these tax systems, and only a modest portion is the increment that arises from having two of the systems as opposed to one. But nevertheless, at this point, in that particular sense of the term, the AMT has become the bigger tax system, quote unquote.
Are you familiar with, is there a largest deduction across the nation for AMT payers? The single largest deduction that they lose, what deduction do they lose first?
They lose the state and local tax deduction in its entirety, so it's the property taxes, as you mentioned, and also either the income or the sales tax, which itemizers have a choice to deduct. They also lose their personal exemptions, and that's kind of an interesting fact because Professor Dallin mentioned we don't normally think of the personal exemption as being a tax expenditure. We think of it as being part of the normal tax system, and yet it is not part of the alternative minimum tax. The AMT treats the per-person exemptions of $3,700 for the taxpayer and the spouse and the dependents as if it were a tax preference, and eliminates that under the AMT.
And so they would lose that. Is that the most common thing that they lose?
Those two are the biggest single items.
And Mr. Johansson, I found your report to be especially good because when you go to your specific examples of dealing annually with the AMT, I think that is that hits most of the families in my district. They plan all year long they think they're planning all year long on what tax they may owe, and then most times they have paid in my district, most times they have paid in too much. And so they are getting big checks back, but they are curtailing their spending during the year because the government's keeping more of the money than they actually need, but they're doing it out of precaution. And it's my contention that if that money was available in the economy to be spent, that we would have an acceleration in the economy. Thank you, Mr. Chairman.
Thank you. Mr. Rangel's recognized.
Thank you, Mr. Chairman, and welcome all of you. Thank you for sharing your views with us today. During the President Reagan and the first Bush administration, there was a dramatic reduction in taxes. Some people believe that that reduction in revenue was responsible substantially for the increase in our deficit. Others have taken the position that any reduction in taxes pays for itself and, in fact, creates jobs and increases revenue. How many of you believe that the reduction in taxes that had been enacted was responsible in part for the tremendous deficit that we are suffering now. So, to the two in the middle, your belief is that tax cuts pay for themselves and grow the economy and create jobs?
No,
Ms.
sir, actually.
Ladies first. Ms. Nellen.
Thank you,
Besides,
Congressman.
she's smiling, so I don't think she'll believe her answer.
I'm not sure what the answer is. I think there's many factors that could come into play that would affect that. I will leave that to, I guess, economists to know if that actually is
Why didn't you put up your
increasing.
hand? Let me reframe the question just for you. There's reason to believe that dramatically reducing taxes not only pays for itself, but increases revenue. If you are confused, argue the point of how it's going to create revenue, since you're a tax expert and you don't do like we do, hope for the best or put a spin on something. It's just hard for people to believe from the math that you can dramatically reduce taxes and then tell the IRS you're in for a boom year.
Right.
Right what?
You reduce the rates, reduce everything, that would be hard to believe that would increase revenue. Actually, it gets measured here. It's measured here as a tax cut.
To defend this theory, Mr. Johannesson.
You
with the other three, though. I mean, the other two.
Right.
You are.
The reason I didn't raise my hand is because it seemed like during some of those times that you referenced in your timeline there, we also raised expenses while cutting taxes. And any financial planner would suggest to you that a client's more likely to have a successful outcome when the revenue coming in is less than the expenses going out of any family budget. And so there have been times in your timeline where we were bringing in less revenue, bringing the base down, and raising our expenses.
How many times have you been accused of having a two-handed argument? Of course, if you reduce spending, it reduces the deficit. But I'm only dealing with what has been said categorically. Reduction of rates brings in an increase in revenue. You're saying, heck no, not unless you reduce spending. In other words, it takes both, I would assume, because we're going to be presented with a budget that reduces revenue and reduces spending. And I think that shatters the myth that it pays for itself. It doesn't pay for itself unless you do something else, reduction in spending.
Correct. One of what would make me not popular necessarily with my clients is that I would actually advocate for modest increase in tax rates, tax revenue.
You do that as an American that's concerned about your country. The hell with the client. If you just know that you don't want a disaster. Who disagrees with Mr. Johannesson that? What? No, Mr. Buchanan's with us. Thank you, Mr. Chairman. No, I don't need the help.
Congressman, can I speak to this question? You're absolutely right, Congressman, that tax cuts normally do not pay for themselves.
I just want to ask the question. During the time for our country, Republican and Democrats, do you suggest that to reduce the deficit, we should reduce the spending and increase the revenue with a tax increase? Is there anyone that disagrees with that? Okay. No, I'm so sorry, Mr. Bayard. Your thoughts were?
Well, you're absolutely right, Congressman, that the typical tax cut does not pay for itself. I do think it's important to realize that if there is a marginal rate reduction in the tax cut, that you normally do get an increase in economic activity, and that there is some revenue feedback from that, but the revenue feedback is not large enough to offset the direct revenue loss, and therefore you do have a net reduction in revenue from the tax rate cut, even though it's not as large of a revenue loss as it would be if there had been no behavioral response.
All right. Thank you. Thank you. Time's expired. Mr. Berg is recognized.
Huh?
Well, thank you, Mr. Chairman. I would like to actually weigh in that debate. In North Dakota, we've reduced income tax. We did that last year. We reduced corporate income tax. We reduced the tobacco tax. And all of those have brought in more revenue. So again, I think the focus of this debate here today is how do we simplify it and our taxes, and how do we move to that place where it's easier for people to pay their taxes and simplify. I enjoyed Mr. Buchanan's statement that every now and then you've got to clean out the barn, as I would call it, in North Dakota. And for people that have done that, there's a lot of build-up there and a lot of different things. And that's quite frankly what we did 2 years ago in North Dakota. We had two tax forms, one that you could take a lot of deductions on, and we had about 2% of the filers on there. And then we had a streamlined one that basically said no deductions, here's what your gross income is, here's what your state tax is. We lowered the overall rate and did away with the long form, if you call it. And again, I think that's what we're talking about nationally here, too, is how do we, again, go back to cleaning out the barn, get to, if you will, a short, simple form, knowing that as time progresses, different policy changes come in for deductions and different things. So, I really like that. The other thing that's such a challenge is just the uncertainty. The uncertainty out there, it's impossible for small business to have confidence in our economy, so they're sitting on their hands, they're not hiring. Everyone out there is worried about this deficit spending, knowing it's going to impact the taxes that they pay, or that there's going to be barriers to that growth. And so I guess I would just kind of simplify this, Mr. Johansson. How difficult is it when all these rules are changing and you're advising your clients?
We do it all the time, so for us it's not difficult. For the average citizen, though, I think it is very complex. I mean, studies would tell you that probably 2% of the population actually use a certified financial planner. So, but we work in it all the time, and it's a matter of trying to scenario plan and look down the road. The issues that we face certainly are not life and death. They're trying to help our clients make smart financial decisions. And so it is complex. There is a number of different areas that each year you have to look through. One of the concerns, quite frankly, that I have kind of on the larger picture, and I think this is to your question a little bit, is the potential impact on these variable rates on the capital markets. We've seen, whether it's in last fall's fall-off of returns in municipal bonds, as some portion of the public left municipal bonds as a result of the changing tax code, and how folks can game the system with regards to capital gains and what investments they're either getting into or getting out of right at the time that there's an inflection point with capital gains rates or ordinary income rates. I think that's those are just a couple of the things that we're thinking about every day.
Well, that's an excellent point. Sometimes we forget about the impact of deficit spending on what really the long-term markets are going to do and how that'll impact even apart from tax code. So thank you. I'll yield back.
Mr. Roscom is recognized.
Thank you. Mr. Buchanan, in your testimony, you made an argument that said that the phase-outs doesn't increase the complexity. Can you walk us through your thinking on that? It's in conflict to what the Joint Economic Commission says. It seems intuitively difficult to track. What is it in your experience that animates the hope that literally phase-outs don't exacerbate the problem with complexity?
Well, I guess my argument was that Mr. Viard's list of phase-outs is a concern, because that's 20 different phase-outs with 20 different starting points and ending points and phase-out rates, right? That's complicated. The concept of having a means-tested phase-out isn't inherently complicated, because 99% of the actual work that people find in terms of doing their tax planning and figuring out which benefits their tax provisions apply to them, right, come before you would ever even think of a phase-out or even think of the tax rate that may or may not be phased out.
Okay, I'm sure you said it well and clearly, and everybody here got it except for me.
Okay.
So the part that is, the first part of your reply was that something was a complication as it relates to phase-outs, and then you transitioned into, but it's not. Where was the nexus?
Okay, the nexus is if you have 20 different phase-outs with 20 different set of rules for each of those phase-outs, that's complicated. Having one phase-out that says, okay, here are a range of tax provisions that get phased out, but it begins at the same income level for all of them, and it ends at the same income level for all of them. right? So let's say that the ending point of the phase-out was $250,000 a year. If I make more than $250,000 a year, I know that I'm not going to be eligible for any of those provisions.
I understand. So they all phase out. That's your argument? Okay. Wouldn't it be better if there weren't any phase out, though?
No, I don't agree with that. I think that the importance of...
Well, it's less complex, but you're accepting as a level of complexity, and you're making the argument that it's better to endure the complexity because of some other greater good. You're not arguing that it's less complex, though.
Actually, what I'm saying is that the phase-out complexity is so minuscule as to not be an important part of the simplicity debate.
Okay, thank you. Can I just ask the other three panelists to take a step back and look at a bigger picture? And I think it's interesting. There's nobody on the panel. There's nobody on this side of the mics that's arguing for the status quo, right? There's no constituency that says, wow, is our tax code fabulous? Nobody's saying that. Take a step back, the other three, and give us some top lines on fundamental goals or jurisdictions around the world that have attributes that you think are worth admiring and replicating and trying to draw from. That's commonly called a softball.
Congressman, that's a good question. I think is worth taking a look at. One comparison point would just be how many provisions are in the particular income tax as far as deductions, credits, exclusions. Do they all need to be there? I would venture to say that our system probably has far more than most would. Also, we have a situation where, as we noted in testimony, so far as like education incentives, there's 14 different ones there. So when one is added, often we're not removing another one. We're just saying, here's one more way you might be able to qualify for something. I think, it might be that, I don't know if other countries do this, but I would guess they might think, well, if we're going to add one, maybe we should be thinking that that's replacing another one. But I would say certainly be looking at just what is feasible so far as understanding and explaining to individuals. And also, there's one comment. So far as complexity, we should think of it not only in compliance, but also in tax planning. Is there complexity there? And certainly the phase-outs do cause complexity in both those categories.
Congressman, this is more my opinion than the position of the Financial Planning Association, but as I think about the underground economy that exists in our country and recognizing that a consumption tax is somewhat regressive and maybe not popular, I do believe that some level of consumption tax, in order to gain access to those monies that are kind of living in that underground economy, that certainly aren't even a part of any of these discussions that we're having today and being filed on a tax return, is perhaps a way to be, or would be an important part or element of the discussions.
All right, thank you. Time has expired. Ms. Black is recognized.
Thank you, Mr. Chairman. And my question goes to the fact that there have been some members on this committee that have asserted that the tax code is not complicated for those that they say are just the average working middle-class American. And one colleague even pulled the code out to try to show his point that the tax code is really there for those who have a larger income or maybe even a business where they're making a larger income. And I wanted to go to you, Ms. Nellen, because I noted in your testimony you did talk about the complexity and how difficult it might be for just an average working American. And I want to make that point as I was sitting here thinking about one of my average working Americans in my district that may be a family of 5 with 3 kids, combined salary of $75,000 a year. We have child care tax credits. We may have one of them that's getting ready to go to school, so we want to know about the education credit. We might also be saving a little bit, and we have to make sure that we're applying that properly to whatever our tax liabilities are. Perhaps a savings plan for our retirement might be a part of that. And so as I look down the list, it seems to me that our average working American, and from what I'm hearing, and I'm going to give one case that just happened to me, and this is a real life situation. I was in my district, in a rural part of my district, and I went to a restaurant, a very small restaurant, and just going around shaking hands, saying hello to folks, saying, how are things going? Can you tell me what's happening in your life, how is it? And one young gentleman, it was, I would say maybe his early 30s, says, you know, I just got a promotion in my job. And I said, that's great. And he goes, well, you know, it would be great, except that now I'm in another tax bracket. I'm working harder, and I'm bringing home very little more than what I was bringing home before. And so, Ms. Nellen, can you help me? Is that what I'm saying to you, actuality, where people who are just the average everyday working person is having difficulty in understanding how to make out their forms and what their tax liabilities are?
Yes, Congresswoman Black, I agree. I think the complexity is well beyond those who are high income and can afford people to help explain that. That doesn't mean it should be tolerated just because they can afford to take care of it, but a lot of the complexity is in the provisions, many of which are designed for low income. For example, there's a savers credit, which is designed for low income individuals. It's fairly complicated to get through so far as what you need to do to obtain it. Your income tax credit certainly is only designed for low income wage earners. So far as the provisions regarding education, retirement plans, any other saving vehicle that could be there, different ways that they might, whether it's funding medical insurance, whatever it might be, I think does raise a significant amount of complexity. That is hitting people who are making something under $80,000. And I think another part of the complexity is that, again, if they're going to use software or they're going to someone who's just going to prepare the return without asking, well, gee, are you saving for college? Those questions aren't always getting asked. If they're just having their return done for, some low fee, they would really need more than that, or they wade through, pages and pages of IRS documents. So I appreciate you're raising that. The complexity is, I think, very heavy for middle, low-income taxpayers.
Thank you. And I know my time is brief here, and I want to just jump up to the next category of someone I actually was visiting with this past week before I got on the plane to come here. He owns a business, and it's not a huge business, but he does make an income of $250,000 a year. He told me, he said, but Diane, you know what? If there are benefits out there in that code that really could help me, I can't find them. And I am paying my fair share, and I am paying what I think, as hard as I'm working, is a big share. And so there is also a complexity from what I'm hearing from my small business owners who make that income of about $250,000, saying there may be tax breaks in all of these books that are here, but frankly, I don't know, and the people I'm paying are not really able to find me these significant breaks, where what we're hearing in the media is that I'm somebody who's really getting these big, huge breaks and I'm not paying anything. And then the last thing that I do want to ask, and I want to ask each of you, define for me, I keep hearing this over and over again, wealthy, that the wealthy should pay more. Can you give me a definition of what you would consider wealthy? And Mr. Buchanan, I'd like to start with you.
Yeah, obviously, there's no clean cutoff on wealthy. It's relatively wealthy and relatively not wealthy. But frankly, I think that when you reach the point that
If you could just quickly answer, is there
what's wealthy?
dollar figure? Because time's expired and we want to get through the 4 answers and then we'll move on.
I think the $250,000 a year cutoff is sensible.
Okay. Mr. Johannesson?
I think a similar number, 250, is probably reasonable.
Okay.
That sounds fine.
And I don't think there is any single answer. I think obviously someone who makes $250,000 is wealthier than someone who makes $100,000, who's wealthier than someone who makes $50,000.
But when we talk about the millionaires who are getting the breaks, we, I think, confuse wealthy with those that we see on television, like the GEs. So thank you.
Yeah, I think it's interesting. Anyway, Mr. Schock. None of you characterized how that income was earned, which I thought was interesting. So, Mr. Schock, it's your time.
I was just going to say, first of all, thank you all for being here. Most of my good questions I was going to ask have been asked, I think, 3 times already. But since Ms. Black asked such a great question, and I was actually quite taken aback by your answers, I guess my question is, assuming you all recognize that the lion's share of small businesses file as either subchapter S or limited partnerships and pay that as personal income tax, isn't it dangerous to assume that somebody who makes, quote, more than $250,000 is, quote, rich, and that hiking the tax on filers of over $250,000 would put an undue burden on precisely those small businesses who have created 7 out of the 10 jobs in the last 2 years?
I generally agree with that, but there is opportunities within small business to help defer some of those, the tax liability if the business owner decides to take the stance and help his or her employees set up a savings program for their retirement. So though I generally agree with you that it could be a risk, there's also ways for them, and I'd love to have the opportunity to talk to Ms. Black and about her constituents and who have that question. But there are opportunities to ultimately reduce the income for that business owner.
You mean if they give it to their employees?
To themselves and to their employees.
Well, let me ask you a different question. Is anybody up here advocating increasing the corporate tax? The current rate for corporations? No one. Okay. So I guess I'm a little dumbfounded that we would actually suggest increasing the tax on filers of over $250,000 if the lion's share of those filers are actually small business owners. And if we don't think it's a smart thing to increase the tax on corporations, why is it a good thing to increase the tax or a justifiable increase in tax on the largest share of small business owners in America? Why is it okay for GE and for IBM not to pay a higher tax, but it's not okay for the local grocery store or the car dealer?
Well, Congressman, I definitely share your concern about how an increase at these high income levels would affect the owners of pass-through firms. Of course, some of those pass-through firms are small, some of them are large, but all of them are certainly part of the investment that takes place in the economy that sustains employment opportunities and wages. I do think that should be separated from the question of whether someone who makes $250,000 is rich. I think someone who makes that income level is rich, and that's true whether they own a pass-through business or not. But the fact that they're rich doesn't necessarily mean that we should increase the marginal tax rate that applies to them. You know, at a minimum, we need to be aware of the impediment that that creates in terms of incentives to invest in pass-through firms.
Anyone else?
Mr. Schock, I think it's important to remember 2 things about this. First of all, $250,000 a year for the owner of a small business is not their revenue, it's their income, right? So we're not talking about somebody who takes in $250,000 and then has to pay it out to employee salaries and that kind of thing. We're saying, you know, net of all their business expenses, what is their income? And so that's saying at the end of the year and you add up what you've made from the firm, it's $250,000. Second of all, if you raise the rate,
but let me just understand. That's the money they then use to reinvest in their business.
Right.
And the corporations that I didn't hear you say you advocating higher taxes on is because I'm assuming we don't want to take money away from a corporation's pot of money they reinvest in. Why is it okay to take more money away from a small business owner but not a big business owner?
Well, in part because C corporations have the 2-part tax that we talked about before. So you're not actually comparing the same things.
They're not both the same pot of money that's used to reinvest in the entity?
No, the point is that for a C corporation, they pay the corporate income tax, and then they can...
No, I understand. Okay. Finally, I'm almost out of time. I'm interested in the lowest wage earners in America. Mr. Viard, maybe perhaps you could address this. How does our tax system as it's set up today, I've got a lot of poor folks in my hometown, and when I talk to them a lot about the incentives to go out and work, get a higher paying job, some families who are trying to get 2 jobs, for example, the way I understand it now is there are some disincentives for folks in the lower end of the income scale when they hit a certain threshold. Could you maybe speak to that?
Just a quick answer, and then we'll move on because time's expired.
There are very high marginal tax rates applicable to some of these households because they lose a number of tax-related benefits and also, in some cases, benefits from spending programs.
All right. Thank you. Ms. Jenkins is recognized.
Thank you, Mr. Chair. Thank you for having this hearing, and thank you each for your contribution today. Much of the focus in the headlines and inside Washington has been focused on tax reform to make our corporations more competitive internationally. However, we should also focus on helping American families prosper. Could each of you just briefly discuss how, first of all, how the tax code impacts or distorts the daily decisions that families make, and secondly, how simplifying the individual tax code could help individuals and families be more successful and help them make rational choices and remove some of the economic distortions which hamstrings their financial security? We'll start with the heavy hitter.
Okay. I think there's a number of impacts that the tax system has on people. There's the almost unavoidable work disincentive, of course, but the provisions that we've been discussing today, I think, have more far-reaching and adverse effects, because it means that when households are engaging in decisions like trying to prepare to send their kids to college or in trying to save for retirement, that they're just forced to deal with an additional layer of complexity that doesn't need to be there, that they really have to think about the tax code front and center if they want to make the best decisions that they can for themselves concerning how to go about what ought to be much simpler activities.
Thank you. Ms. Snell?
Thank you, Congresswoman. I think clarity would actually help. For example, if their desire in the tax law to encourage people to save for their retirement, perhaps there should be, one particular way of doing that. So it's very clear, if I put this $1,000 into this account, I'm going to have it just earn interest tax-free, or perhaps I'm going to get a deduction for some portion of that. I think today they're looking at, I would like to save for retirement. I'm not sure if I'm going to have positive or negative tax implications of doing it particular ways. So I think just the added clarity would be a big benefit to actually all taxpayers.
Okay.
Congresswoman, I'd like to see a day someday when I believe that more than 2 or 3% of the public actually think about this stuff on a daily basis. I would like to get there, and this being Financial Literacy Month, would love to help educate folks and create incentives for them to actually think about this and do their planning. But unfortunately, it's not the way it is today. Folks think about this stuff on or about April 15th. And then quickly forget about it after they've either stroked the check or are now in some kind of payment mode. So I would hope that we can get to a point where we do that, but we're not there yet. So.
In addition to what Ms. Nellen mentioned in terms of planning for retirement, planning for health care spending, planning for a college education, I think that perhaps one of the greatest effects on what we would call everyday Americans is this sort of sense that they don't really know what's going on. An earlier comment indicated that people thought there are provisions out there that I could be benefiting from, but darn it, I can't find them. And so I think one of the costs of complexity is a sort of morale cost, an important one on the citizens of this country, to essentially say the more pages are there and the less time I have to read them, the more I have a sense that that I'm somehow getting left behind.
Okay. Thank you, all of you.
Thank you. Dr. Price is recognized.
Thank you, Mr. Chairman, and I appreciate you sticking around. I want to thank the panel, and I want to try to touch on one item that has been talked about, and two that I don't think have. The first is this notion that if you decrease tax rates, that you don't increase revenue. The three cases that are cited most frequently are President Kennedy's tax reductions, President Reagan's tax reductions, and President Bush 43's tax reductions. Do any of you disagree that the reductions were followed by an increase in revenue to the federal government for each of those three administrations?
Well, I don't believe, Congressman, that they caused revenues to be higher.
That's not the question. That's not the question, because I mean, it's a very complex situation. The question is, the tax reductions occurred. Did the federal government see an increase in revenue? Anybody disagree with that? Great.
If I can clarify, Congressman, you mean that revenue was higher
after
in
the
some
tax
subsequent
reductions than before?
In nominal terms, I think that certainly
Yes.
was true, sure.
Yeah. Okay, and then we can argue about, or we can discuss about why indeed that occurred. But there was an increase in revenue to the federal government following tax reductions by each of those administrations, Kennedy and Reagan and Bush. I haven't heard anybody talk about we're talking about the burden of the tax system. I haven't heard anybody talk about the progressive nature of our tax system. Top 1% pay about 40% of the taxes of income earners. Top 10% about 70%. Top 50% about 97% of the taxes. Do any of you believe that that progressive nature is harmful in any way to our economic system or to our society?
There's always a trade-off, Congressman, between the degree of progressivity and the impact on incentives. As the tax system becomes more progressive, it features higher marginal rates for those who are at the high end of the spectrum, and that does create disincentives for work under an income tax system as opposed to a consumption tax system. It also creates disincentives for saving and investment, which is a very critical distortion. And as you've said, Congressman, the individual income tax today is quite progressive. I should note that the numbers you give are for the individual income tax, not for the tax system as a whole. And the overall tax system is somewhat less progressive than the individual income tax in isolation. But I think that there is a lot of misconceptions. People think that the high income groups are not paying taxes. And obviously we can debate, should they pay more, should they pay less? But we need to face the reality that they are paying substantial taxes now. They are facing significant marginal tax rates. There are disincentive effects. And we also need to realize, I think, that as we try to close our fiscal gap, that increasing taxes only for the top 2 or 3% will not close that gap.
Yes.
You know, obviously, if we are willing to accept the disincentive effects, that could be part of the response that we adopt.
Thank you.
But certainly not the whole thing.
Does anybody on the panel disagree with the statement that Mr. Viard made, that is that if you increase the tax rates, there is a disincentive to saving and a disincentive to investment?
I don't disagree categorically, but I think that the evidence on the degree of response is ambiguous at best, and the best evidence indicates that the responses are quite small.
We've been talking a lot, I think that's debatable. We've been talking a lot about the burden regarding the income tax system for individuals and for families. I'm of the belief that our tax system currently punishes all the things that we say that we want. We want hard work, we want success, we want entrepreneurship, we want risk-taking, we want savings, all of those things that we say that we want. Yeah, we punish all of them with our current tax system. Wouldn't it be simpler and a less burden to society if we did away with the income tax system and went to a consumption tax system? Wouldn't that be much simpler and less burden, understanding that you take into account those at the lower end of the economic spectrum with a prebate and the like?
Well, Congressman, I believe that consumption taxation is superior to income taxation. I would like to see the income tax system, both individual and corporate, completely replaced by a progressive consumption tax. It would eliminate the disincentives for saving and investment. The work disincentive, of course, would still exist, but the disincentives for saving and investment be eliminated. And a significant degree of the complexity of the current tax system could also be removed. It would not be, a panacea to create a completely simple system, but there's a number of complexities relating to income measurement and to depreciation and such not that would simply be swept away in their entirety by using consumption as the tax base.
Anybody else want to weigh in on consumption tax? Ms. Nellen?
I think a former question regarding what do other countries do. I think countries tend to have both an income tax and a consumption tax in the form of a VAT. With the focus of this hearing being on simplification, I do want to just point out that any tax could be complicated, and I think on a consumption tax, so then when you talk about, well, gee, we're going to exempt this, this, and this, then you get to defining those exemptions, that you've got a fairly complex provision. Or if you want to say, well, we want to encourage people to buy this, so we're going to have a lower rate on that particular item. So any tax could be complicated.
My time is running out, Chairman, but I do want to say for the record that an income tax and a consumption tax is the worst of both worlds, which I strongly oppose. Thank you.
Thank you. Time's expired. I want to thank all 4 witnesses for your testimony and for your willingness to answer questions today and helping inform the committee. This hearing is now adjourned.